Everybody, Stephen Nagy here with the Money Multiplier. We got Ask Me Anything live and in effect right now. Get your questions in the chat box. We're going to answer them. We'll introduce ourselves. I'm going to do a quick little introduction video, and we will be right back. Hey, welcome to Ask Me Anything Money Multiplier edition. We got the Money Multiplier team here today. I'm Stephen Nagy, been running the show with Mr. Naugle in Ireland. He was sending some really cool pictures earlier. They're in a big church having dinner, and Mr. Kessler's out there. Mrs. Kessler's out there. But we got the young and impressive Hannah Kessler with us in the house today. What's up, Hannah?
The favorite Kessler.
Oh, all right. You know, they do have Wi-Fi in Ireland. They just got it in the last couple of years. So they might be watching right now. So you got to watch what you're saying.
It's recorded too, just so you know. It is recorded. So
That's true. It's on the internet. It's going to be there forever. So what's up, Hannah? What's new? You been doing any new podcast episodes lately?
So doing a lot of podcast episodes, a lot of traveling and speaking. I'm going to Cancun on Friday to go teach a class. Then after that, we got a little break. And then next week, we're going to go out to Phoenix that following week. So in 2 weeks, a lot of traveling coming up. So actually, y'all, it's 23 and 23. We're live. We're hitting the road. The next one is coming up in Pittsburgh. I don't know the exact dates. I'll get it out. I think it's next week. We'll put the link in the chat. Can we do that, Steven? How to register for the event? Because it's a free event that we're hosting.
Tuesday, Wednesday.
So check this out. So this is going to be the Pittsburgh events, Tuesday, Wednesday, the 25th at 6 p.m. and Wednesday, the 26th at 9 a.m. or 1 p.m. So you can come to all three. You can pick one. It's going to be the same thing during all three of them. But we love to have you there. Bring a friend, bring a guest, bring a couple friends, bring family, bring the kids. It's all good. So you can go right here, click save your spot. And it is a free ticket. And we do got some little goodies that we're going to give away to some of the people that show up on time and stick around for the whole thing. So that should be some good time in Pittsburgh, Pennsylvania. I believe the location's out there by the airport for those of you from Pittsburgh. So we have the dates on, the location.
It was right there, courtyard.
Wherever it is. All right. So Chris is going to be speaking at that one. And Joe, are you going with him?
I am. I will be there.
So we got Chris and Joe there. All right. So the Courtyard, Pittsburgh Airport. So the 25th and 26th, and we got, 20 more of those coming up this year. So definitely check those out. Is there one page we can go to see all of them yet, Hannah, or are we just waiting for releases?
It would be on our website, themoneymultiplier.com. You can find our events up there. I don't believe all of them are added on there quite yet, but if you're in our emails, you will get emailed of when those are coming out. And then I know actively by month's end, everybody should be up there, all of the different locations of the cities. And registration is going to open 30 days before the event. So it doesn't get opened up any sooner than that. So 30 days prior to the event, that's when the registration will open.
All right. Awesome. So tell me one more thing, Hannah. Tell me the latest guest you had on your podcast. Who was it?
Latest guest. It was Jonathan Hurl, actually. So John was on my podcast. John and I are good friends. He used to live down here in Florida. He's originally from Kansas City too, but so he I like him just because we nerd out on a lot of money stuff. So we're deep into the book, The Creature of Jekyll Island, talking about the Fed and the money and the inflation of our dollar and government intervention, and so it's kind of fun on there. So thanks for asking.
Awesome. And where do we watch that? Where is it? Where do we listen?
Yeah, no, you can listen. If you go to our link tree, like if you're on the Money Multiplier Instagram, you got the link right there in the bio. You go anywhere. You go to Spotify, Apple Podcasts, Google Podcasts, all the other ones that are out there. We're everywhere. The Money Multiplier Podcast. If you put that up in the podcasting app, it'll pop up for you.
All right, man. We're here to answer other people's questions, not yours, Hannah. Stop talking so much. Come on.
now he's poking today.
Just having fun. Come on, let's go. Carson, what's up, Carson?
What's up, guys? Doing good. Actually, some news. My dad and I are starting our own podcast as well. Hannah, going to compete with you.
That's fun.
It's so a lot of you guys might know my dad. His name is Greg Herline. He does the self-directed IRAs. He's on here a lot. Not this specific video, but a lot of Chris's different videos and webinars we do. So starting a podcast talking about just older generation talking about money and the younger generation, how they compare our perspectives and how we can kind of help each other and kind of that father-son duo. So it's going to be out in the next few months. We're starting it up now. So we're excited about that.
That's very cool, man. You got Greg, the old man. You got you, the young guy. You need me as the middle guy. I'm just saying, Greg, just kidding. Greg and I are pretty close in age. Just joking. That's awesome, Carson. How's California?
Beautiful. It's nice. It's 75, sunny.
Yeah. Love it. All right, Joe, I know you got about 3 minutes left. What's happening?
That's right. I've been busy the last 3 days on phone and handling people's problems, solving them one at a time.
Well, give us one. Give us a problem you solve. Let's hear it before you go.
Oh, really?
Come on, say something. What are you doing? Okay.
He's got to turn in his homework.
All right, we'll go to Jason. What's up, Jason?
How's it going, Snaggy? You're doing an awesome job, man. Keeping the energy moving, asking questions, poking bears. Joe, are we giving you time to think about this? Who you helped? What the solution was? Or
Oh, come on.
or you only have a minute and a half left? What's going on? So,
That's about it. Yeah, I got to go pick up Ariana across.
yeah, no. So just magic down here in Orlando. As you can see, the studio's coming together. We got Yoda, we got Darth Vader in the background. They'll be closer in the future because I will move myself closer to that wall. They won't actually move closer because they're paintings. They don't move. But we'll get there. We'll have some fun.
Yeah, you guys, we're waiting for questions here. Let's get some questions in the chat box. We're just kind of wasting some time. So anyone listening, throw your questions in the chat box and we'll start answering those. But what's new with you, Jason?
I just gave you all the new stuff with me. Next week, I'll have a new computer. So no more bad audio, no more bad video. It'll be amazing. A new Mac is coming my way.
I want to know what's new in the infinite banking world. Are we designing any new policies? We got new clients? What do we got?
Well, we had some magic on my last call. We had a husband and wife getting started who are working with another company who no longer supports infinite banking. And so their agent couldn't explain anything to them. So we had a nice conversation and just sent them over to make sure we're saving their kids' financial future for their college funds. So really interesting guy, does a lot with recruiting, actually solves people's problems in the IT world and outsources it to people who are better qualified. And it was a pretty interesting dynamic conversation, my friend.
There you go. See, Joe, that's how it's done, man. Jason's helping people. I don't know what you're doing. So
He makes it up as he goes. He has no clue.
All right. So we'll get to Craig next, but just to share a couple pictures. So we got Mr. Naugle and Mr. Burr out in the castle getting ready to have dinner. Actually, I think it's a church castle out there in Ireland. So they look like they're having a good time out there. And then I got one more picture to share of Mr. Kessler and Mrs. Kessler about to chow down on some dinner. Look how cool this place is, though. I mean, how neat is that?
Wow.
So really, really cool trip. So that trip is put on by One America, American United Life, one of the insurance companies that a lot of you guys know that we do business with for the infinite banking concept. Probably one of our favorite companies to do business with, not only because they have probably the best policies that I've seen right now in 2023, but their customer service is great. And they just do an excellent job working with our clients and working with our team and helping as many people as we can get started with this powerful strategy. So thank you, One America and AUL for hosting Brent and Terry and Chris and Devin and the rest of the people that are out there having a good time in Ireland while we're here holding down the fort. So what's up, Craig? So Craig was, while he's unmuting, Craig was on hosting Wealth Webinar today and ran us through. Tell us what you did, Craig, today, if you happen to miss it. Uh-oh.
Oh.
Yep, sound.
Oh.
You're unmuted, but you still got no sound. No, still no.
No, he's coming. Wait, nope. Now you're muted again.
Oh, now we're frozen. All right, we'll come back to Craig. So the good news is,
hey, he's got my computer today. What's going on?
Testing.
There he is. There he is. There he is.
Here? All right. Cool.
There you go.
Yeah, so Nagy and I have been spending some time together, but we have the Wealth Webinar. And I also have to tell you, Mr. Nagy is the one that gives us all of our titles every week. So If you want to know, that's where they come from. But what we talked about today was we were racing policies versus savings accounts. And we kind of talked about that in terms of if you have a fighter jet versus a top fuel dragster and you're racing a quarter mile, which one wins? Well, guess what? The top fuel dragster wins. The savings account is like the top fuel dragster. The policy is like the fighter jet. What do you want to do long term? You want to drive a top fuel dragster, or do you want to be in the fighter jet? So that's what we talked about today.
Love it, man. It was a lot of fun. And since you called me out on the names, Jason didn't have one. I went ahead and added. So if you got any extra cash in around, let's go ahead and fund Jason's GoFundMe. He's in desperate need of a microphone and computer, according to his intro. So there we go. You got donated to a good cause right there. All right. Thanks, guys. Great to see everybody. Thanks for being here. Let's get into some questions here. And Noah says, I'm seeing Hannah's commercials for Charleston. Love to see you in Columbia as well. So you doing Charleston, Hannah?
I think Jonah and Jeremiah are.
Okay.
The Cash Compound on TikTok, Instagram, all of them, they're out there.
Yeah. So Noah puts on a really good event a couple times a year in Columbia, South Carolina, called Re-Up, and the Money Multiplier is represented there by yours truly. And we do have a good time, though. It's a great event. And then we got the Private Money Club Money Tank going to be the weekend after Noah's summer re-up. So we got the summer re-up the last weekend in July. We got the Private Money Club Money Tank in Raleigh, North Carolina, the first weekend, the first Friday, Saturday in August. So some other events coming up for the East Coast. All right. So Finance Juan says, hey, I'm about to graduate college with a bachelor's in finance next month. After consuming your content over the past few months, I realized that I no longer want to be a financial advisor. What different types of career paths do you recommend I should take as someone who has no work experience in the financial industry? Any advice is appreciated. Anybody want to hit that?
Find a mentor. Find a mentor and literally just follow their moves. See who you want to live their lifestyle. And I would just go see what they're doing and just start implementing the steps and kind of learning from their day-to-day life. I mean, that's what I did. That's what I did with Dad.
Yeah. I mean, so that was my path. I mean, out of school, I was a financial advisor for Ameriprise Financial. I got all the licenses, 7 and 66 and variable annuity and all that good stuff. And did it for a couple of years. I got to say, I don't regret it in any way. It was an amazing experience to, figure out how to pass the Series 7 exam and kind of learn that side of the investment world. I believe over the last 15 years, it's helped me help more clients by understanding both sides of the fence, the traditional means of investing and what that looks like versus what we do as entrepreneurs and investors. So I wouldn't necessarily say don't go that route, but always be learning the other side as well. So like Hannah said, find a mentor, find coaches, take training programs, invest in yourself. I mean, that's ultimately how I got out of that industry was purchasing and investing in trainings and coachings and hiring mentors myself and going out there and doing it firsthand. And I got to say that, mentors can definitely help you on your path. You're going to pay one way or another. You're either going to pay a mentor or you're going to pay through your experience, through mistakes that you make. So it's kind of up to you which way to go with that. But, there's definitely a faster route and that's a great thing to do. So you got what you really want to do, though, is find your passion, because whether you pick real estate investing, infinite banking, concept, financial advising, whatever it is, if you don't have passion, you're not going to want to wake up every day and do it. Consulting with other people is not for everybody, and being an active investor is not for everybody. So pick what you like, and ultimately that's what make you happy in life, is being able to wake up every day and do what you love and do what you're passionate about. So that would be my biggest advice, I guess, if you guys have anything else to share.
No, yeah. I'm glad you got there, Snaggy, about the passion, right? Because if you're not passionate and curious, you're not going to dig deep enough to really find what's true. You're just going to go along with what everybody else is saying, right? You really got to ask questions, look into it. And there is a level of trust, though, too. So don't take that the wrong way. Like, I want you bringing your questions, but like Hannah says, we're not playing whack-a-mole all the time either, right? Like the same question over and over, the circle. It's really up to you guys to go out there and learn what you want to learn, have the passion, figure out what problem you're solving, and then take action. If you're not taking action, then you're not getting anywhere. You're just theoretically thinking about things. So go fail somewhere.
Yeah, I think there's also a Venn diagram I'm seeing in my mind here. Who doesn't love a Venn diagram? So you've got the passion. That's great. You've got to have something that adds value. Otherwise, you're never going to make any money. And then you've got to have the skills to be able to explain it and deliver it. So if you can find something that you're skilled in over time, something that provides a passion that you want to be involved in, and then you have the skills to match that, you're golden. Venn diagram right in the middle.
I love it, man. I love it. Just shout out to James Dixon. So he's a rock star. Dude does all kinds of business and has a YouTube channel that gets more views than Tony Robbins. I'm part of Kelly Cardenas's group. And so what's up, James? Just a shout out to him. Anybody else want to add anything for Finance One?
Well, so I can add briefly too, because I'm in the very, very similar spot right now as Juan is. I'm still getting my degree just on the side, and I'm going to finish up in the next year or two as well. And so, you know, I think Snaggy's advice was perfect. It was awesome, exactly what I would have said too, because I'm on that same path. I originally went to school thinking I'd go into finance, and I wanted to get a finance degree. And over the past year, I've kind of switched to being like, actually, I kind of just want a business management degree, some sort of administration degree, kind of just overarching goal of understanding everything in business. And now I'm going to go learn from Chris Naugle, Stephen Nagy, everyone on this page, my father, and other people around me, and kind of pick what I really want to do for the rest of my life. I don't know exactly what I want to do yet, but I want to be in all these things and do all of them. And over the next few years, I'm sure I'll figure out what, like everyone's saying, what my perfect and best passion is. And I'll get there. But we're probably in a similar situation where we don't know exactly and don't need to know exactly right now. We're just kind of here to experience different things and learn. And I think getting a mentor is a great place to start. So that was awesome advice from Snaggy.
Awesome. I'm still here. I'm just having issues with my video for some reason. All right. So let's go ahead. So Eve said, I don't see Hannah's Money Multiplier podcast on Amazon. I am techie dumb. I don't have Instagram or Spotify. Is there a way just to find it? Is it on like Apple Podcasts or Google Play? I don't know anything about that world, but
yeah. So go peek on the chats, like between you and I, Steven, right here in this page. I sent you the link to the link tree. Do you mind putting that in the comments?
Absolutely. There we go.
There we go. And then if you click on that link, you'll see the podcast in there.
Cool. I'm going to log out and log back right back in. Let me see if the next question. Let's see. How do you feel? James said, James on the Money Multiplier team. James said, how do you feel AI will influence the insurance industry from sales to actuary duties? Can you speak on that, Hannah, maybe?
Yeah, no, I
I'll
can.
be right back.
Here's my advice on it, though. I feel like you're always going to have a personal touch on an underwriter case. There's always going to be things that are going on in somebody's health, and everybody's different, you know? At the end of the day, this is life insurance, and folks are looking up your dress of you specifically as a person, and everybody's different. There's always going to have to be a physical touch on cases that go through underwriting. It's not just always going to be AI straight technology that's happening. Yeah, maybe they can keep automating stuff like how we always have. I even remember using the Silk One software in the chiropractic business when everything was automated on that site. You know, yes, we're going to progress as time goes on, but to totally like I actually just saw this out on Instagram. Did y'all see that new McDonald's that just opened up? That's 100% all automation. Like there's no human employees there. Did y'all see that? No? Okay.
No, that's awesome.
So I feel like that there's never going to be a time that insurance companies are just going to be 100% all automation, no human touch. But yes, you know, they could speed up some things in there, which we already have. You know, there already is the accelerated underwriting that can happen if maybe you fall into these guidelines for the insurance company where they are not requiring you to do the medical exam and everything. you can not have to do the exam and get approved for a policy, but you got to fall into the guidelines and the stipulations that they're putting there. So yeah, I think there could be some automated changes that happen, but you're never going to get away from the physical touch of underwriting when it pertains to life insurance. I mean, these insurance companies have been around since the late 1800s, right? Some things have progressed forward where like the accelerated underwriting has been introduced, but it's never going to be it's just never going to be fully automated. I don't know, it's my opinion. Did I even answer the question? What was the exact question? If we're going to see AI come up in tech in the
Just how you feel AI will influence the insurance industry from sales to actuary duties.
Yeah. This is such a relationships type of business, y'all. I just don't, if anything, I don't know. I feel like we're kind of going back to the human touch. I don't know about y'all, but I would rather get out there and go join a class rather than sitting on a webinar and talking to everybody. You know?
Yeah, I mean, I'm going to start writing a book right now and putting some stuff together. And so I just put a post on Facebook, like just looking for a little bit of guidance, on the details of it. And, I had several people comment like, just have AI write it for you. And it's like, no, an AI cannot write what's in my brain. And at the end of the day, the personal touch will never be replaced by AI. Even if it's my last dying breath that fights against that. So for me, I want nothing to do with it. But, obviously if you can make things more efficient, I'm all about efficiency in business, but I'm a relationship person, always have been and always will be. So I'm with you.
I was kind of thinking about that as well. I think with what we do from a sales perspective, AI can't replace that.
No.
AI can't replace us helping people understand how to put this process in motion, to pay down debt, to finance things they need and want, and to do investments. But I think where the insurance industry could benefit from this be things like term policies. That's pretty simple. How much money do you have? How much death benefit do you want? Go.
Yep.
And there's not a lot of thinking there. So, but for what we do, I don't know. I think it's going to be a challenge and quite a jump to get to that point.
I think aren't the actuaries already robots? That's what Chris shared on one of our shows, that they're pretty much already, robots in motion, just playing a little bit. But I think of Skynet as soon as I hear this, right? Like Steve and everyone that said here is there's it's a little bit freaky, because I was talking to a guy that I ride with the other day about this, and he's saying, Einstein's IQ is around 185, and supposedly this will, 1,000 to 2,000x that is what AI will be. Right. So like there are going to be things that we can't even imagine. I'm just not smart enough to imagine what it could be. But at the end of the day, we want to connect with people, because that's why we're here, right? It's part of the love and the connection, the communication. How can we solve? How can we help? How can we build community? That's going from being a dependent to being independent to being interdependent. The interdependence is this. It's this community. It's what we're building together. And I don't think that's taken from Skynet or anything else, right? So.
Yeah. So what I'm starting to wonder about is Chris Naugle perhaps really a robot?
Uh-huh.
I don't know.
Could be.
I love it, man. I love it. All right. So let's see. We got a shout out to Damon. Damon said, everyone on this journey are awesome. I get so much financial education from everyone. I officially do not have a whole life policy yet. It's a family, but he's got one that's about to go in force, right, Carson? I actually talked to Damon earlier this afternoon. Awesome guy, veteran. Thank you for your service, sir. Also in the corrections business for many years, him and his wife, and living the life down in Miami and being smart with their money and building a legacy and generational wealth for his kids and grandkids coming, and awesome dude. So I know, Carson, you know him, and just want to give a shout out to Damon. So thanks for being here.
Yeah, Damon, I was just looking just now while you mentioned that your policy should go in force sometime this week. So we're excited for you, man.
Awesome. Brian says, where do you see home loan interest rates going the next 6 to 12 months, or too hard to predict? What do you think, Hannah?
I couldn't hear that question over the echoing that I'm hearing.
What happened there? I thought that was me.
I don't know where the echo's coming from.
The robots got mad. They're making us echo now.
Justine, 1, 2. All right, now I think we're back on track. Hey, so one more time, where's this question coming from?
Where Do you see home loan interest rates going in the next 6 to 12 months, or too hard to predict?
Oh, where's Joe when you need him? I personally, I feel like they're either going to stay the same or keep going up. I mean, what do you guys think?
I think they're going up.
Yeah.
Yeah.
What are they right now? That is around like a 6 to 8, kind of average being like 7.
I didn't do what the F this morning, so I didn't look into all this stuff. Personally, I could see them increasing a little bit more, and then we are going to see a big crash, and then we're going to see a lot of quantitative easing and dropping back down to 0 interest rates, and the mortgage rates will follow after a crash, in my opinion. But I think they'll keep going up this year.
Yeah.
Not financial advice, right? That's a tough one though, Brian. I mean, but the Fed has said that they plan on continuing to increase. So we'll keep an eye on that, and we will do a good What the F show hopefully next week. Let's see. Where's the questions? Automation is like your washer and dryer and dishwasher. AI is the human-like learning and output. AI is the ability to think like a human, called transhumanism. All right. Yep. William's in the insurance business. What's up, William? He said it's still 100% relationship-driven business. And I think you're out of Texas, right, William? Let's see. Tess said plus the financial side of actuarial will still have hands. Every quarter, companies calculate several actuarial scenarios, prepared board reviews, chooses auditors, sign off. AI can calculate, but letting go of choice doesn't seem likely. Great feedback, Tess. Thank you. Tess was in the industry for a long time as well. People like some AI talk. Thank you, AC. You guys rock. Look at that. All right. Ron said, I don't have my lump sum payout yet. Should I call now to get info for what I want to accomplish, or wait until I get paid so we know what I'm working with?
You don't need a lump sum to start.
So start now. Yeah, Ron, you want to plan now. You want to get prepared. You want to get approved, and you want to get ready. And even if you don't have the full lump sum, we can still build it to get that money in later on if that's what you choose to do. But there might be better strategies. So go ahead and get a call scheduled. All right, we're looking for questions. In the meantime, Jason, you've always got some motivation. What do you think, man?
Ooh, over to me for motivation. How about something I say every day, right? There's two, and see if anybody knows the answer. Maybe Hannah knows. Hannah, there's 2 pains in life. What are the 2 pains in life?
2 pains in life.
A wife and a kid.
Taxes and death.
This is recorded, Snaggy. You said it earlier, man. I don't think that's going over well. What was your guess, Hannah? I didn't catch it.
I don't have a guess because I feel like the pains in life, heartbreak.
Cool.
Heartbreak sucks.
You can tell what part of our lives us two are in, right?
Wow, yeah, everyone. Yeah, this is an interesting question. Look at the space it's opening up.
And
pain, man, money and time.
Okay, I like those. How about the pain of regret or the pain of discipline? You choose. You choose. Doesn't matter what we're talking about. We can talk about finances. We can talk about working out. Like, come on, think of how many times that you're always going to get up and go to the gym, but I slept in.
Look at that. Bruce Parsons got it. My guy, Bruce.
There you go. Pain of trying, pain of regret. So that's it, right? And so that's the choice that we're all making in these conversations. When someone's saying, hey, should I wait? Should I do this? Should I do that? It's really, again, taking that action because it's all theoretical. Everything we're talking about is theoretical. We don't know if the market's going up and down. We don't have crystal balls. We don't know where things are going to be a year from now, 5 years from now, 10 years from now, 20 years from now. But we do know that when we teach you all how to move your money, is something that's not being taught anywhere else. And so if you pick that discipline and apply it, your life will change. If not, you're beyond here saying, hey, I should have started, could have started, would have started, but you're only living with regret at that point.
I like Uni's comment, pain of taxes and pain of double taxation. I like that.
There you go. How's that,
That's
Steven? Is
funny.
that good? We getting questions in that time? That filler?
I love it, man. Yeah, you got to start somewhere. You got to learn to crawl before you walk before you run, and then you can get up and do marathons, man.
Yeah, here's
All
a
right.
fun marathon story for you. So you asked about this pain. I have a buddy who decided that, he's in good shape. He's an athletic dude, plays hockey and stuff. He decided he's going to do an Ironman. So someone talked him into signing up. It wasn't me. I didn't talk him into that, but he did sign up. And so then he got a bike eventually. He hasn't taken swimming lessons yet because he needs some of those. It's 2.4 miles in the Gulf of Mexico is not a short swim, right? And he goes to me the other day. He's like, Sip, look, I'm riding my bike. I've ridden the last 5 days. I'm doing this. And I'm like, when are you going to start training? He's like, I am training. I'm like, you ain't training, bro. You're exercising. You don't have a plan yet. You don't have a plan on how you're going to execute, what you're going to learn. I mean, you are learning, but you're exercising. Totally different thing. So just think of that when you're researching things. Are you applying it? Have you taken what you've learned and applied it? Or are you just exercising, thinking about it for that one day, someday?
Love it, man. Got to have a plan. All right. Alex said, you guys talked about it on today's webinar. If I have a large lump sum come in and I deposit it back into the policy, will that go towards paying back my loans and be available to redeploy when ready?
Yes.
So Craig did pretty good earlier talking about the buckets. You kind of want to walk through that real fast, Craig?
Yeah, so we talked about that on the webinar today, but the answer to your question is yes. So if you replace the money that you took out from the loan, that will increase your available cash value to take out again. But what we talked about on the webinar were 4 buckets. There's the premium bucket, and when you put money into that bucket, it goes ahead and compounds uninterrupted for the rest of that insured person's life. The other bucket that we were talking about is that cash value bucket, and that's just an indication. I almost described it as a gas gauge. How full is your account in terms of the amount of money you can take out in a loan? Now, as time goes on, that's going to go up and down, right? As I take a loan out, that available cash value is going to decrease. That doesn't change anything going on in your premium bucket that keeps compounding, right? But anyway, as you take money out on loan, the cash value number goes down. As you put it back in, it goes back up to reuse again. And then you got the death benefit, which is the collateral against that loan. And then the last bucket we talked about was the general fund of the insurance company. That's where your loans are actually coming out of. So those are the 4 buckets we talked about today.
I like that. I've not heard that broken down in the 4 buckets. Anybody write that down? Craig, you should give us a warning. Write this down, right?
Write this down.
Write this down.
Or Jason, you can come on the webinars that we hold that, we teach this stuff on. Just throwing it out there.
But I was saving someone's life at that moment. I was saving someone's life. They needed my help.
All right. Let's see. J-Rock said, hi, new here. Might not be the right place, but I do have a question. I'm trying to pull my liquid capital back out from a commercial real estate property that's about to be sold. You interested in my question? Yes. I thought that was the question. Yes, please ask the question. Let's see. Facebook user. Annual premium deposit is due. Does it do me any good to pay it 30 days early? Does it start compounding when received, or send it in on time, or if paid on the grace period 30 days late, does it start compounding from the anniversary date? You want to hit that, Hannah?
I mean, you're letting the nickel hide the dime. All right, we're rubbing 2 pennies together until the beavers fart right now. All right, so literally, yeah. I mean, if you got the cash, go ahead and pay your premium early. But yeah, the insurance company will only allow you to pay it 30 days before the premium due dates. But I say if you got it, go ahead and pay your premium. Don't just let it hang out in your bank account.
I don't think it applied to compounding though until the day of the anniversary date. So you might lose like a couple weeks of it sitting there. But at the end of the day,
it's safe for storing the
gotta
policy
clear it.
in a central bank account.
Right. Yeah, exactly. So, but yeah, I believe it starts on that anniversary date. All right. What happens? Uni said, what happens to the premium bucket and the cash bucket when a person dies and a death benefit bucket is paid out?
So if you have a loan outstanding when you die, that just gets deducted from the death benefit. But I almost think this question, and Yunhee, you can respond to that and update this if I'm missing it. But are you asking, can you have the death benefit and the cash value?
I think so.
And the way I look at that is, if I sell my house, do I get the sale price of my house plus the equity that I had? So if I have $300,000 equity and I sold my house for, 600,000, do I walk away with 900,000? No. So the cash value is just an indication of how much you have available inside the policy to, borrow from, but it's ultimately your death benefit is what gets paid out.
Yeah,
So
it correlates too. I mean, remember the death benefit rises as everything else rises, so it's kind of relative, right?
Yeah, and if you look at the way a policy is illustrated, go look at year 121, because what'll happen is the cash value and the death benefit are the same. So the policies are designed so that by age 121, if you're still alive, you're getting not both of those, but one of those. You're getting that death benefit paid out at 121. Throw a big party, invite us all. We want to be there, but you're going to have a big party because you have all that money to spend.
Uh-huh.
Hey, Hannah, my dog just got back. Come here from the spa. She got the summer cut. The summer cut.
Yeah, there you go. That looks like a piper. Wait, you're doing the same thing.
It does look like a piper.
Tail.
Hannah has the same dog, so I like to show her off. All right, thanks, Craig. That's perfect, man. Thank you. All right.
Okay, hold on. They chimed back in again. I think this question comes up a lot because it's the big buy term, invest the difference kind of defense. Is that when people think, hey, whole life sucks because when you pass away, you don't get that cash value bucket. Well, no, your cash value bucket is literally your death benefit. Your cash value bucket is nothing more than a prepayment of your death benefit. So the insurance company is just saying, hey, you can use some of this equity inside of the policy or cash while you're living if you want. So if you have a death benefit, let's use numbers, okay? Easy numbers. If you have a death benefit of $1 million and you have outstanding at the time of your graduation date, aka your death date, is $600,000, and you've been using that $600,000, and hopefully you've been following our teachings, you're not just going to the casino or buying those Gucci shoes. You've been buying cash flowing assets with that whole life policy money, that $600,000. So at the time of your passing, your beneficiaries would get 1 million minus the 600,000 because the insurance company already gave you that money while you're living. So then the remaining 400,000 would get paid out tax-free to your beneficiary. If you had all of your loans paid back, you have a $1 million death benefit, you have no outstanding loans on the policy, then your beneficiaries would get that full $1 million. So your cash value is a prepayment of the death benefit. They are tied. They are one and the same. That's all I wanted to say.
Cool.
And you can use that prepayment to create an asset. That's what, Brian just posted something. That's what made me think of. So if you invested in a piece of real estate or something that's cash flowing, if you have it set up correctly, then they're going to get the remainder of the death benefit minus the cash value plus the asset, right? Like that's what we're teaching people to use the money for, is to go create more assets.
Yes.
Cool. All right. Damus said, can anyone expound on purchasing tax lien certificates escalating here in Miami?
Ooh, that's a good one. That'd be Suleiman. I don't know if Suleiman or Mahib would get on and talk about that maybe.
They do tax liens?
I know they invest in a little bit. Isn't like the tax, like the there's like non-performing like tax liabilities, and then they'll come in and buy it, and then that person has to then now pay them, kind of like in the note business for mortgages.
Yeah,
or no?
So tax liens and deeds are different in all 50 states, and they can vary by county. So it's kind of a hard subject to kind of teach specifics on without really getting into all of it. Florida is, for example, a tax lien state. So when so basically a tax lien means a piece of property somebody does not pay the property taxes. So the county comes in and places a lien on that property, a tax lien. And after a certain amount of time, those properties go to auction. Typically they'll auction these things off. And so you as an investor can go in and you can purchase a tax lien at an auction. And each county and each state have different interest rates that they pay when a tax lien is placed. So in Florida, for example, I want to say it's been so many years since I bought tax liens. I used to buy them like 10 years ago. I haven't done it in a long time. I used to buy them in Florida, actually. I believe it's 15%. So if you go in and you buy a tax lien and you own that thing, when somebody pays it off, you're going to get 15% annual return on your money. But what happens at these auctions is they start the bidding at, let's say, 15%, and then it drops from there. Like Texas, I think, is 25%. So what's going on with the industry is these big hedge funds and banks and corporations come in, and they've really made it very competitive. So they'll start the bidding at 15%, but then it'll go down from there. So these banks will come in and buy these things at like 5%, because again, that's better than the 0% they were getting in, bonds at the time or whatever. So they really came in and really disrupted the industry. So it's very competitive, but you can still find deals out there. And where a lot of people will try and do it is, we don't want the interest. Like in Florida, you have to hold it for 2 years. And after the 2 years, you can apply to actually take that property back, where you can actually get the deed of you can foreclose on it, and you could get the deed on the property, assuming there's no other liens that are superior to yours. Even though a tax lien trumps it, people can still come in and get it from you. But the idea is that you foreclose on it and you get the property for nothing more than the back taxes that you paid for it. And now you own that property free and clear. So there's different strategies for it. There's different ways. Every state is different. There's a lot that goes into it. And again, a place like Miami is just very competitive. Not to say you can't make money in it, but those are the basics. Does that help a little bit?
I learned something.
I learned a lot, as always.
And we can get into that stuff. I lost interest in it because it got so competitive years ago, and it
sounded complicated to me. That's where it got. It sounded like it's something, if you really have a passion, interest, like we were talking about before, then go for it, learn all these things. But I started hearing Charlie Brown's teacher after a while. Like Steven did a great job. I was learning, and then it just started being wah after a while. I'm like, wow, that sounds hard. That's what I thought.
Yeah, but it's one of those things. I kind of played in that market as well for a little while, but you go to these auctions, some of them you have to be present, some of them are online, but people are coming in with these hedge funds, big piles of money and just buying up big bulks of these tax liens, where what I was doing is kind of looking at specific tax liens that I wanted to buy. And they just come in and outbid you. And so it gets it to the point where it's like, it's not even worth it at that point. But yeah, like anything else, you get educated and go after it. But
there you go. So J Rock, just his question was, there's an existing mortgage I'd like to use subject to, so the down payment will allow me to get my liquid capital back out, and the other investors be the bank for the buyer. Yeah, J Rock. I mean, as long as you're able to do that with the existing mortgage and you have investors that are going to fund the deal, it sounds like. I mean, I guess I'd need to know more. I don't really understand that. You guys get it?
Nope, not sure.
So Eve said, Hannah, the last Zoom meeting training I was on that had your father talking, you mentioned being able to see us being distracted instead of paying attention. Could he really?
No.
Oh, don't give away his secrets. You can see every single one of you. Even you that's sitting on the toilet right now.
Yeah, you forgot to turn off your camera.
Man, there's some people.
There was a video floating around where somebody was in class. They went to the bathroom. They forgot to turn off their camera.
Here's a good question. Steve said, do the life policies also have living benefits?
Yeah, the terminal and chronic illness rider.
Those,
they get added onto all policies. They're free of charge. If you ever come into a chronic illness, meaning that you have chronic illness, meaning that you can't perform 2 of the 6 daily activities of living, or terminal illness, docs are saying, hey, you have less than 12 months to live, then the insurance company will start paying out the death benefit early to you to help cover for medical costs or assisted living needs.
Cool. I always wonder what those were.
And can you speak more into that too? Because I've been getting a lot of questions on people wanting, accidental death and dismemberment and all these other supplemental insurances. And, I think that, so I've had that question a couple times in the last 2 weeks. What I'm feeling is some people are just wanting one thing to solve all of their insurance needs when we're really teaching banking. And then we have some additional great living benefits on top of it, like as long as you're healthy and standard or above, right?
That's it.
So like, what would you tell someone that's asking those kind of questions? Like I gave him my answer, but what would you say in that?
Yeah. I'll turn you on to other resources, because like those riders that are on the policy, the terminal and chronic illness, it's not like long-term care in the traditional sense, because, hey, once you deplete that death benefit and you're still here, you still have the needs to finance for some of those things that you have going on in your life. There's not going to be any more death benefit to get paid out. And now once you do graduate, there's no death benefit that's going to get paid out to your family and your heirs. I don't know. I mean, I can just kind of talk from like a personal standpoint. Is just that like my family now, because right, I'm still young, y'all. To be honest with you, I haven't put that much thought into long-term care needs right now. Okay, but like mom and pops though, so mom has an asset-based long-term care policy with One America, because in my opinion, they have the coolest long-term care product that's kind of out there on the market. So, and we have people that are in our group that I can turn you on to if you want to learn more about that stuff. So mom has one just because dementia and Alzheimer's runs in her family. Dad doesn't have one, because dad's thought process is, well, hey, I got all of these properties, my rental properties and things and my other houses that if I ever did need this type of cash, I'm just going to dip into the equity inside of these properties and help this with my assisted living needs, so I think it's just dependent really on what you want to do, insurance is just insurance at the end of the day. When you're talking about long-term care, it's just really protecting you from those future things that come up. And I guess it would just ask yourself, well, hey, how important is this for me? I don't know. I'm thinking my game plan for what I'm going to do is I want to use my policy money to go out, keep creating myself more cash flowing assets that I won't even have to think about where money's going to be coming from, because I have all these multifamily apartment buildings that are paying my bills and will keep generating me revenue at that point in time, So I don't know. That's just how I'm thinking about it.
Good way to think about it, Hannah. See, it all depends. But and one of the things I shared with them is like, I think Brian wrote this, it sounds like insurance for insurance, not for banking, right? And that's kind of what I was sharing. Like the more risk involved for an insurance company, right? Whether it's AD&D or whether it's long-term care, the more risk, the more cost, the less efficient for banking, period. Yeah. Like even if you could add all that stuff on, then are you really banking? You're just, again, what is this solving for you? And if you have other needs, then perhaps you're adding additional things to it, like to your arsenal. It's like diversifying.
Awesome. One other question from J Rock. Can you do a 1031 exchange from a commercial property to a residential property? I believe no. I believe it has to be like kind, which would be commercial, residential has to be similar, but just consult with a 1031 attorney. If anybody wants to know what a 1031 exchange is in real estate, when you sell a property, you can basically kick the can down the road and not pay taxes and roll that into another property. There's all kinds of rules around that, though. You have to identify the next property within a certain amount of time. You have to close on it within a certain amount of time. So make sure you do that right if you're going to do it. We also do similar in the insurance industry. So if you have like an old piece of shit IUL or something like that, it might make sense to do what's called a 1035 exchange, where we take the cash value, the profits from that old policy and roll it into a new one for you for infinite banking. So we can do something similar as in real estate with these life insurance policies also, which is pretty cool. Craig, got one for you. In the webinar today, you said you're going through the trust journey and have experiences to share. Could you mind sharing a couple experiences?
Yeah, I mean, it's just been one of those things that took me about a year to get educated on where I want to go next in trust structures, because there's so many different structures out there. But you've probably heard the comments, and I think it comes from Rockefeller, but it's own nothing, control everything. So that's where I'm trying to get to is essentially get all my assets into a particular type of trust structure where I don't own them anymore, but I control them. So there's a lot of details around how that's put together. I'm happy to chat with you if you want to reach out to me. Email is craig@themoneymultiplier.com. I'm not sure why I can't add to the comments, but I don't know, Nagy, if you're able to throw that in the chat. But yeah, Andy, if you want to reach out to me, I'm happy to have a conversation with you about it.
Cool. Let's see. Can you finance a down payment with policy?
Yes. Down payment for a house.
Very good.
Speaking of, my mortgage holder just increased my mortgage bill starting next month.
Why? Because your escrow went up?
Yeah, it's a little bit. And like HOA fees and property taxes. I mean,
I mean, your mortgage holder isn't Brent?
that's Brent.
You're keeping all the money in the family. I was just going by, concept being applied. I figured it had to be. So you're paying him back.
Bank of Kessler. There you go. I got to tap into that bank one of these days.
Does he have dum-dum suckers in the lobby of the house?
No, he's got his favorites. His are those chewy lifesavers.
Oh,
those.
yeah.
And then you know what he does? All right, sorry, Dad, I'm about to put you on blast. You know what he does? He takes the little thing. He likes to put it around his tongue as he's eating them.
That's awesome.
Things
All
we
right,
learned.
Damon.
We always learned something. Who wrote that down?
Let's see. I have an opportunity to do a finance, thinking about a cash out refi to refund my IBC policies. I then throw the debt snowball amounts towards the new mortgage as extra principal. Thoughts?
So okay. I wish Joe was still here. Joe does not like refinancing. Nagy, have you kind of caught on to that too? Yeah, Joe is always about HELOCs. Instead of creating those new notes and stuff with the bank. I wish he was here to give more explanation, just because he's been doing it for like 13 years using HELOCs and policies, and then going through and then to his rental properties and stuff. My question would be, why are we refinancing, and why aren't we doing a HELOC if there's opportunities there? I don't know.
Yeah, I mean, that's probably why Brian was asking about what our interest rates are going to do later this year, if he should wait or whatnot.
Yeah,
I know that, like, I was looking at the HELOC for myself, right? And the thing I found is when you're a new entrepreneur, you have to have 2 years of revenue coming in for the structure to qualify, which hasn't been 2 years yet, so I don't have 2 years. But the rate had gone from 6.8 to 7.5 fixed over 5 years. So then the question really becomes, like, are you able to cash flow that enough in that one pot system? If you're able to qualify with your debt to income ratio to really start moving that. Like, I had it all structured out within 4.5 years, all debt gone and cash flow and $4,500 a month just from what I'm doing now without using anybody else's money. So if you can do that, it still makes sense, right? But it's going to be a case-by-case scenario on what you're trying to accomplish. Can you do one pot? Is it fixed? Right? Because you don't want to get a balloon now. They are going up, right? So
yeah, he has a unique situation. He had a old HELOC that he's still paying on from a business venture that went bad. And so I think it might be tied up from that. So maybe the way out of that is the refi. And so I don't know if Joe's been doing some cool stuff like the all-in-one mortgages and all that. I mean, it might be worth a phone call, Brian, with Joe, and just shoot me an email. I'll connect you with him if you don't have Joe's contact info. But you've been around for a while. If we can help you in any way, we definitely will, Brian. So just shoot me a message and I'll connect you with Joe and let's have a conversation and see what we can do. So Damon said, own nothing and control everything, right, Craig? And then Russell said the way to do it, a non-grantor, irrevocable, complex, discretionary spendthrift trust with IRS code 643. So there you go. That's next level stuff. Next level stuff right there.
That's exactly it.
I love it. We're at the top of the hour, 5:30. So I wanted to thank everybody for being here today. I think we got to most of the questions. If there's any more, give us a shout. We're here for you all week. Otherwise, we'll be back here next Wednesday, 4:30 p.m. Eastern. Actually, I will not be here next week, so I'll be on an airplane flying out to the Money Tank event in Salt Lake City, Utah. So hopefully I'll see you guys there Thursday night, all day Friday, all day Saturday. It's going to be an awesome event. Is anybody coming? Any of you guys going to be there?
No.
Carson, you can't make it?
My dad will be there, though.
I'm on the fence. I might drive out. I don't know yet. We'll see.
All right, Craig. All right. Well, hopefully I'll see all of you at the event. Otherwise, hope everyone has a great week. Thanks for being here. We'll see you guys next time. Any saying goodbye words, Hannah?
No, nothing. All right. I appreciate y'all. Thank you.